Hello, dear friends, and welcome back to Crypto's News. It's me, Omar Bam, aka Crypto, and it's a real treat to be back here delivering what is going on in cryptocurrency today to make sure you make the most informed decision and protect yourself in these crazy times, whether it comes to financially, cybersecurity, different things. I love to share anything pertinent to you. So yes, a real treat to be back here with Crypto's News and the relaunch. Remember to subscribe to the new channel. We're almost at 2,000 subscribers. Thanks a lot to those of you guys who've been here again since the new beginning. It means so much. A special thank you also to 8Y and everyone else who's been helping me out with sound issues that I've been having. Hopefully it is resolved for this video. I did have to cut the byte rate somewhat, so my upload speed, it might be something related to my internet connection indeed. And so hopefully that's been fixed. I've tried other things not have to do that, but I might have had to make that concession at least. But still, I think what's most important is you guys get quality sound. So let me know if everything is working out finally in a good way. And of course, welcome to everybody back in the live stream here. Radiant Jumper, Renee, Dr. Berg, Pothead, getting more and more people joining in and hopping in on the streams is really, really nice to see. So let's go ahead and get started, as we're going to be talking about quite a bit today, as usual. But the main thing is, of course, Celsius. We're going to be taking a look at the bankruptcy examiner's final report and presentation, which is extremely damning. If you thought Celsius and Alex Mashinsky, the lead executive, had really any good intentions since the beginning, I think that is quickly proving to not be the case. We're going to be taking a look at that and plenty more. So sit back, have a nice beverage or snack, and enjoy yourselves. So let's get into it. So when we're looking at the prices today, we did have a bit of a bounce back, but I would still say it's pretty much flat for the most part. Bitcoin now is up only 0.3%. It was up a little bit higher on the day, but settled there. Ethereum likewise up 0.5%, so pretty much in the same area. Nothing too crazy, coming down from some of the really nice upward volatility that we recently had. I think this is actually going to change a bit again after tomorrow when the Federal Reserve has their next open market committee. I think as the market digests that, as the words come out of Jerome Powell's mouth as to what the Federal Reserve is thinking here, you're going to see the market swing this way and that way. And I think it'll pick up volatility somewhat. until the next meeting in March. I believe that's March 22nd. Anyway, so when we're looking also here at the dominance, I think that's of note. 40.9% for Bitcoin, which has been going up somewhat, and Ethereum at 17.5%. I thought this was interesting. Edward Snowden did share this. I guess it was 2 days ago, but I didn't mean to share it with you guys. I think it was interesting because a lot of what we're covering here has to do with financial freedom. So there's different ways to think about financial freedom, of course. Oh my God, it's so cold here in Texas. I can see icicles outside. That's crazy. There's actually like snow falling. Wow, haven't seen that in a while. Anyway, so if you're thinking about financial freedom, there's personal financial freedom, and there's also the bigger meta thing about financial freedom just in general, because I think slavery is alive and well here, as I've mentioned before. It's just financial slavery. That means you have to work more and more for perhaps another employer, for the money delusion that we all share, right? This idea of needing to accrue more money to keep the current way we think about civilization going, your current means within that. All of this just basically means spending more time. And one of those things that's sapping up our time, having to accrue these dollars or euros or pounds or whatever it is, wherever you're listening to this, it's striking that a lot of that, and this is globally, it's not just in the US, but this is showing in the United States, the average share of monthly household income going to rent has been ballooning. You can see 30% there in this chart that was shared by Edward Snowden, the ratio of average rent to median household income. So spending more and more of your wealth, financial wealth, in order to just pay for rent, a house over your head, a home over your head. And it's getting more difficult, I guess, to be a renter, because I'm hearing that a big percentage of millionaires are even now renting, being concerned with the housing market. So it's putting upward pressure on people who do rent. And it's just a crazy market out there. We need to have a way out. And I think cryptocurrencies continue to present the best form of money and escape from all of this. And so I'm really happy to be here with you guys covering this. It gives me a great meaning to my life. So thanks for listening, of course. But to go back to the dominance, which we had just looked at a minute ago, you can see Bitcoin dominance. For me, it looks like it's actually painted a bottom here in 2017, which is Bitcoin's market cap, the percentage it has of the total market cap, considering all cryptos or most cryptos that are listed. This is coinmarketcap.com, but there's CoinGecko, there's CoinCap. There's so many different ways you can look at this. But for the most part, you can see that in 2017, because of proliferation of ICOs, different altcoins coming out, it looked like Bitcoin did bottom here around 32.44% dominance. And despite the recent bull market, I'm sorry, it actually, yeah, despite the recent bear market, usually that's what you see with Bitcoin's dominance climbing. It actually didn't climb that much after 2021. It had a few spikes here and there, but to me, it's pretty much flatlining here. And maybe it actually starts going up. Maybe people are losing confidence in altcoins and some of that. But it doesn't look like it actually wants to drop much more Bitcoin dominance below that 32% level. Right now, we're sitting at 42%, but even during the bull market, it didn't drop substantially. So to me, this is interesting. I think over time, there might be more trust for Bitcoin here. And I think it'll be the same case personally with Ethereum. You can see here in the darker blue versus the orange for Bitcoin. So you can see this dark blue level rising. My prediction is that eventually there will be some sort of flippening if things continue the way they've been going. And Ethereum will eventually surpass dominance of total market cap for Bitcoin. I could be completely wrong. You have yet to see a nation state adopt Ethereum as native money, but you see more and more central banks using similar technology to it. And I think ultimately the main idea is that they will want to be not in closed silos, but connected to a public decentralized ledger after there's some sort of crisis of faith or something like that. And they will want to have nodes that are operable with the public blockchain and have a lot of utility. And I think Ethereum will present the biggest opportunity for that. And that will be a big driver of things. But ultimately, I think it's, to me, almost inevitable that Ethereum will eventually surpass that. It'll be interesting to see what happens with the Bitcoin dominance at that point. But to me, it looked for a long time like Bitcoin was trending down, and perhaps it still is. Maybe in the next bull market, you will see a leg lower than the recent, what is this, 38%, 38.16% lows that we had. but it'll be interesting to see whether it actually breaks that 32% level that it had back in 2017. There's less trust again in altcoins, ICOs, and the like. So thanks so much, Renee and M. Coogan, for the feedback on how the video is going. I appreciate that technically. But yes, I don't know. I think eventually when it comes to Bitcoin versus altcoins, for the most part, there will be some sort of balancing level here. But I personally just am more excited to see Ethereum continue to go up. Word of warning, I'm not trying to say that you should invest in Ethereum. It could very easily go down as it does. It's not to say that you can stomach the volatility in crypto, but hey, you're already here. So you might sell at the wrong time, buy at the wrong time. It's hard to do that. That's why dollar cost averaging investing tends to produce the best results for cryptocurrency. Anyway, this is striking. Wow, I haven't looked at ultrasound.money in some time. It's just a page that I was visiting quite a lot during, well, in the area leading up to the merge, when Ethereum moved over to proof of stake, which allowed people to lock up tokens, and that was going to be the only way to actually validate the network, getting miners using hardware out of the picture. Or rather GPUs and ASICs, and instead moving toward staking, and that being a way to validate the ledger, getting a chance to do that. Anyway, that happened 138 days ago. There are mechanics in place since EIP 1559 that result in the burning of a substantial amount of fees that go into the network, especially when demand is high on the Ethereum network, and that happens mostly during the bull market. A lot of ETH gets burnt away and is immobile. It gets taken out of supply pretty much. And that is, it's interesting that even though it's been a bear market, you're seeing numbers like this. Maybe we're turning more bullish, but imagine during some sort of bull market where there are an insane amount of people, again, using Ethereum, and it tends to happen during bull markets. It has a spark because of just some of the brilliant minds, financial minds, technological minds in the, especially in the modern era of thinking of things like DeFi, of thinking around ways to create value around different economies of scale. A lot of those minds are really focused on what they can do with Ethereum, its Turing complete language and everything else. So you see innovations happen oftentimes first on Ethereum and then move outside of that, like NFTs and, again, DeFi and ICOs. So it's a question of what might be the next one, or will one of these old concepts again boom again. But if we do see fees continue to climb during the bull market, then imagine how the supply chain could drop even more. So right now you're seeing, since the merge, a supply change for Ethereum of negative 5,239 ETH. So basically, since the merge, there is that much ETH less in circulation out there, rather than what you traditionally see, which is more and more ETH or more Bitcoin or more issuance of another coin because of mining, because of vesting schedules, which is ridiculous to me. That gets locked up, for example, when a new token gets created and the founders keep some for themselves or some sort of treasury. But anyway, usually you see more supply out there. With Ethereum, you're actually seeing a contraction in that amount of the total issuance because of this burn mechanism that is natively in the protocol. If we had still been on proof of work, if the merge had never happened, you would instead have 1,618,373 ETH. So that's, ETH had ballooned so much. It was like $10 when I first heard about it. It's ballooned so much since then, and that was even with the supply climbing at huge rates. And now with the rates that it's climbing at, and in fact being burnt, it's actually seeing at a reversal in supply. So for right now, we're seeing a negative 0.2% rate per year for ETH, which is phenomenal. So to me, this is showing that there's going to be less in circulation, less out there potentially to be bidding up, and this could pose concerns, right? If you're trying to be a buyer, the price might get ahead of you. I just noticed the sunglasses here under current supply. If you guys remember some of that Sean Adams drama that we had been covering with BitBoy back in the day. That's probably why that's there. Anyway, yeah, I'm still quite bullish. I think Ethereum, because of the many eyes looking at it, the development and so much else, and the new way that the fees work and supply, I think it's headed much higher. And so I just feel sometimes like I don't have enough ETH. You know what I'm saying? You guys know what I'm saying. Most of you guys have been here for a long time. Anyway, it looks like the next major upgrade for Ethereum, the Shanghai and Capella upgrade, is full steam ahead here, as it says, as Paratosh, an ETH developer, said, because the testnet for withdrawals for ETH that has been staked is launching tomorrow, February 1st at 15 UTC. It's called the Zhejiang testnet. It's going to be testing this new upgrade that's going to feature all sorts of Ethereum improvement proposals, and that's pretty much set to go. And this is something you can use the ETH tool if you want to test out for yourself. If you're running your own node and you want to make sure that everything's going to be going fine and you don't do a mistake when withdrawals are finally enabled, which are tentatively set for March, well, you might want to go ahead and test this out yourself. And this is something that's been anticipated for a long time. Yeah, you can lock up ETH and stake it right now, but you cannot remove that ETH that is locked up until this upgrade takes place. So there have been the detractors saying that the upgrade will never take place. It's some sort of scam to get you to lock up all your ETH just to limit the amount of ETH in circulation to temporarily pump the price. I mean, there's a lot of mental gymnastics going on here, despite the amount of development you see in discussion that is public, by the way, and posted of the development in its own progress. There are those who maximalists or detractors from other coins who think this never will happen. They might be surprised when it does, because they usually don't follow development. They just rehash other arguments. But anyway, this upgrade that is going to be coming out is going to allow about 500,000 different validators to withdraw 16.279 million ETH. So about 16 million ETH that are currently locked up right now will be out in the wild, or could potentially be out in the wild slowly over time. There is a queue to withdraw, but there is speculation that, from, again, the detractors, that this withdrawal will actually start some sort of drop in the price. I don't know that I see that coming. I think if there was going to be a drop in the price, the release of a testnet like this would probably precipitate some sort of dump. We're not really seeing that right now. Could be wrong again. There could be some sort of dump. I don't think it would be a legitimate dump. I think it would be done on purpose, but it's harder to do now, just considering the size of the Ethereum market, to try to artificially create some sort of dump. But yeah, we need like big players in order to artificially do things like this, and a lot of the bad players have been weeded out during this bear market out of here. So they just have less of a say in these markets. But anyway, I personally don't think it's going to be bad. As others have pointed out, you're likely not going to see a rush to withdraw as much ETH. In fact, you could actually see even more ETH locked up. You have those like David Hoffman pointing that out on Twitter, that because of it being more liquid, less friction when you lock up your ETH, the fact that you can now withdraw, you don't have to be worried about some sort of time commitment when you lock it up. That makes you, as a fund or as some sort of wealthy individual, more likely to lock up ETH in 32 ETH buckets, because you can withdraw now a lot easier than having to wait for some speculative upgrade to come out. So I actually don't think this is going to have a huge impact on things. I think people are still going to want to, or I think for me personally, the wise thing is to probably stay staked and earning ETH, which I think will be much more valuable in the future by continuing to stake and get those rewards. But let me know what you guys are thinking, of course, along these lines. Maybe you're finding something that I'm not. Maybe I'm missing something completely here. But I am actually quite bullish about ETH. If you had asked me like 2 years ago if I would be bullish about ETH withdrawals when they finally came out, I would probably be quite uncertain. But now I really don't think that's the case, especially since we've gone already through such a prolonged bear market. I can't see things really being impacted too much. Anyways, what's up, Rob Groove? What's up, Kevin? What's up, Bobo? Thank you so much for joining me here. I'm glad you caught me live too. Anyway, yeah, there's a website. You can get more information there about the testnet. That's zhejiang.ethpandaops.io. I will put links later on in the description below once I'm done with the video. So Coinbase wallet, I should probably move along here because we are going to be looking at this Celsius thing, and I wanted to show you Very interesting report. But here we have Coinbase Wallet. It continues to do some great upgrades. Coinbase Wallet is not the same thing as going to Coinbase.com or pro.coinbase.com and having assets on their website or on their centralized database. This is like downloading MetaMask or having your own Ledger hardware wallet. This is something where you keep possession of your keys. You can lose them, or your seed phrase rather. This is something you control, and they have been working on this Coinbase wallet to allow for people to more easily interact with decentralized applications, NFT applications, for example, decentralized finance, just to make it a little bit simpler to use. And they've added some new safeguards, which I think are really interesting. Smart contracts can be difficult, especially for people who don't study Solidity and so on, to look at and know what's going on there. They're adding a tool now. When you do transactions in there, it will more easily let you know what you're doing with different tokens, what you're losing with some sort of trade and getting more of a transaction preview, they call it. They're going to make it clear when a DApp is requesting approval to withdraw your crypto and or NFTs, since you do have to grant those permissions. They are doing spam token management. You might remember many different tokens that might be randomly showing up if you go to Etherscan and check out your wallet and you see, what is that token? What is Mithril, whatever? What is that worth any? Oh, it's worth $17,000, but I can't withdraw it unless I send them 1 ETH. Anyway, some of these spam tokens that are straight up scams that are frequently airdropped, it looks like they're doing a management of this, so they won't show up within that wallet. They will automatically know it's some sort of spam token that you might not want to engage with. They are doing a DApp block list. So if some sort of DApp is malicious, if it has malicious intent, some sort of rug pull in the smart contract, they are adding a list of those DApps, and those will show up there for you so that you don't engage with them. They do urge you to do your own research. And so many other features, which I think is really cool. Also allowing you to, however, use your Ledger hardware wallet if you do appreciate the ability to use your hardware wallet with this wallet, enabling you to do so natively. So you can show up 15 different ETH addresses if you want to between Ledger and the Coinbase wallet. I appreciate this. You know, it's good to see competition between different wallets. I think this is great for the end user. We should be worrying about things like security and smart contract understanding for people, so that less people hyper focus on the perils of the crypto economy and focus more on the good that we can be doing here. There has been definitely bad, but it has just sped up the development of protections for people. It's good to have these native protections rather than have these regulators try to come in and control things like the White House, which we talked about earlier this week. Yeah, you guys get me. Anyway, Coinbase has also introduced this to all 100% of users who use Coinbase Wallet. They call it the new ERC20 self-service asset recovery tool. So in the event that you have sent tokens to Coinbase that they do not support, they will allow you to recover using a tool that they've launched there. Recover almost 4,000 unsupported ERC20 tokens that were sent to them that they do not support. So you merely need your transaction ID and your wallet address, and you can get set up there. So if you have made that mistake in the past, this might be something useful to you. I know, again, some of you guys have been here for a long time, and this might apply to you. It'd be a good way to recover some of what you've lost if you had issues before. What else we got here? Oh yeah, let's get into the Celsius stuff. So this is an examiner, a bankruptcy examiner. So a bankruptcy examiner, they're not super common, but they go in the event of into companies in the event of Chapter 11 bankruptcies, usually appointed by the court, and they get information from whatever company might have been related to fraud or so on, like you're seeing with Celsius, and they produce evidence for the court for the Chapter 11 bankruptcy and so on. And so here you have Shobha Pillai, the examiner with the Celsius bankruptcy, and she has put out a crazy report, which I wanted to show you guys. Talks about, for example, how Celsius did use customer deposits to honor withdrawals in the few days leading up to the bankruptcy. For example, they had at one point only had 1.96 million Gemini USD in their main wallets, but without transferring eternally or anything, as they got new deposits in the 3 days leading up to bankruptcy, they honored 3.96 million GUSD worth of tokens versus the 1.96 million that they actually had before those deposits came in. And it was in a section there in the report where you had a coin deployment specialist. His name is Dean Tappan of Celsius, who said that the practice of using customer stablecoins to buy Cell token, Celsius's native token, was very Ponzi-like. And he said in an internal communication that his job title should be Ponzi consultant. But when this broke out publicly and this surfaced, he actually said that it was a poor joke and he didn't really believe that Celsius was operating a Ponzi scheme. But anyway, this is all here in this report, the final report of Shobha Pillai Examiner, and I am going to read to you guys about 8 pages worth of this. They're pretty short, and you'll see they're very engaging. That way you know what to look out for in the future. It's still early days in crypto, and when somebody promises you the world, you will probably remember this part of the video and be like, I remember the report that crypto covered one time, and this sounds very much like what Celsius was doing. So let's take a look at it at the executive summary. The business model Celsius advertised and sold to its customers was not the business that Celsius actually operated. Through its website, marketing, emails, Twitter, live stream, town hall meetings, and other messaging, Celsius sold its customers on the concept that it was better than traditional big banks. By investing with Celsius, its customers were told that they would be able to unbank themselves. I remember that. And enjoy financial freedom as part of the Celsius community. Celsius emphasized that it put its community first and that its business would be built on trust and transparency with its community members. Celsius promoted itself as an altruistic organization, bragging in one blog post, "Can we really bring unprecedented financial freedom, economic opportunity, and income equality to everyone in the world? We are Celsius. We dream big." Celsius boasted that its primary financial product, its Earn program, was the safest place for your crypto. Customers who participated in the Earn program transferred their crypto assets to Celsius in exchange for interest, or what Celsius called rewards. In turn, Celsius deployed its customers' crypto assets through further loans, investments, or on exchanges to generate income, or what Celsius called yield. Celsius's co-founder and majority owner, Alex Mashinsky, repeatedly told customers in his weekly live stream conversations referred to as Ask Mashinsky Anything, or AMAs, that customer deposited coins are your coins, not our coins. It's always your Bitcoin. When asked what would happen in the event of a bankruptcy, Mr. Mashinsky told customers coins are returned to their owners in the event of a bankruptcy, even in the case of bankruptcy. Celsius advertised that it knew how to generate high returns with low risk by doing what Celsius does best, carefully vetting its financial counterparties and ensuring that when those counterparties borrowed crypto assets from Celsius, they pledged over 100% collateral to secure their loans. Celsius sold its customers on the promise that Celsius would pay them at least 5% annual interest, and their rewards would equal each customer's shares up to 80% of Celsius's revenues. Another cornerstone of Celsius's marketing strategy was its promotion of its native Cell token. Celsius told its customers that Cell was its backbone. Wow, had a weak spine there, Celsius, with Mr. Mashinsky repeatedly equating the value of Cell with Celsius's value. Celsius explained that it intended to raise the initial capital to fund its business by selling 325 million Cell tokens through private pre-sales and an ICO, an initial coin offering, and that these sales would raise $50 million. Celsius told customers that they would receive rewards in Cell that Celsius would obtain from its internal treasury, which would hold an additional 325 million Cell, or by buying Cell in the secondary market. According to Celsius, this process would create a self-sustaining flywheel. We've heard that term before. Celsius's marketing efforts would start the wheel spinning by generating more users and thus more assets for Celsius to invest. Celsius, in turn, would earn more profits and buy more Cell in the market that it would use to pay rewards. And as a result of the demand spurred by Celsius's Cell purchases, Cell's price would increase, generating more earnings for Celsius's customers. What could go wrong? From its inception, however, Celsius and the driving force behind its operations, Mr. Mashinsky, did not deliver on these promises. Behind the scenes, Celsius conducted its business in a starkly different manner than how it marketed itself to its customers in every key respect. Cell trading. Celsius abandoned its promise of transparency from its start. Celsius's first significant transaction after it formed was to launch its ICO, a transaction that Celsius expected would raise $50 million. That did not happen. Instead, Celsius sold 203 million of the 325 million Cell offered for sale, raising $32 million. But Celsius never told its community that it failed to sell all of the Cell. Despite its promises of transparency, Celsius debated internally whether to tell its community how the ICO actually turned out, but decided not to do so because it feared its community would be upset. Celsius also did not reveal that while Mr. Mashinsky originally pledged to purchase any unsold tokens from the ICO, he failed to close on that purchase. Those unsold tokens amounted to 117 million Cell. Celsius also hijacked its own flywheel, concealing from its customers the extent to which it was making the market for Cell. Initially, they can't even do their own Ponzi right, their own scams right. Initially, in 2018 and 2019, when the crypto markets were in decline, Celsius bought Cell as it advertised it would to pay rewards. During this time period, the price of Cell remained well below the ICO price of 20 cents. But starting in 2020, Celsius decided to substantially expand its purchases of Cell for the purpose of increasing Cell's price. Instead of buying Cell when it needed to pay rewards, Celsius began timing its purchases so that they would prop up Cell's price by creating activity in the market. Celsius also began placing resting orders to buy Cell, which were triggered if the price of Cell dipped below a set amount. Celsius also began selling Cell in private OTC over-the-counter transactions, while making offsetting purchases of Cell in public markets, where it believed its purchases would impact the trading price. So basically, they were doing private backdoor deals. Here's a bunch of Cell tokens, give me a bunch of money. I don't want to sell them out on Binance. I don't want to sell them on the public market because it will automatically drop the price. We will suffer slippage. It will create problems. But we need to sell these tokens. So instead, we'll sell them in private. In private, we'll tell them that it's going to pump so that they don't sell it. So we've sold it, we've made our money, but it hasn't really impacted, or nearly to the degree it could, the price of the Cell token if it was sold in the open market. Internally, Celsius referred to this new strategy as its OTC flywheel. Celsius's buying spree worked to push the price of Cell higher and higher. Although the crypto markets were up in 2020 and 2021, the percentage increase in Cell's price was significantly greater than the overall market increase, due primarily to Celsius's purchases of Cell. I remember so many people telling me to buy Cell. How are you not in Cell? Look at these crazy gains that it's had. Those were not legitimate gains, friends. Between mid-March 2020, just as Celsius was beginning its buying spree, and June 2021, Cell's price increased by 14,751%. So if you did get ability to get those gains and lock them in, take profits, congratulations. Although Celsius, and I'm not talking to Alex Mashinsky, as we're going to get into, because he made a stupid amount of money for himself with these tokens. Although Celsius told customers that it would purchase Cell to pay customer rewards, it did not tell its customers the extent to which it was making the market for Cell. Instead, in one of his AMAs, Mr. Mashinsky told customers that the over 2,000% increase this year in Cell's price was a great validation of the utility of Cell, as well as the flywheel running on its own, instead of us having to crank it up every once in a while. But internally, Celsius's head of trading desk recognized that Celsius was in fact cranking up the flywheel. He wrote to other employees, including Celsius's then chief financial officer, "Just to clarify between us three, last 3 months, we bought always more sell than we pay as interest per week, but we did not buy it for the interest payments. That's just what we told the community. After a round of sell purchases in September 2020, the same Celsius employees congratulated themselves on our good work, resulting in people thinking the price of sell is going to the moon. The increasing price of sell had 3 significant consequences for Celsius and its insiders. First, it significantly inflated Celsius's balance sheet. Celsius accounted for sell in 2 buckets. One, treasury sell, consisting of the sell Celsius minted at the time of the ICO, but did not offer for sale, what I was talking about before with vesting and all of that. And 2, non-treasury sell, consisting of the sell that Celsius bought on the market for itself and its customers. In February 2019, Celsius added its treasury sell to its balance sheet at the then market prices, resulting in an increase in reported assets of $6.6 million. By December 30, 2021, after the pump, Celsius reported the market value of its treasury sell was $1.5 billion. Reminds me a lot of FTX, valuing themselves relative to others using their own token that they held a lot of. The following chart illustrates how the increasing market price for sell improved Celsius's balance sheet and what happened as Celsius could no longer afford to prop up sell's price in the run-up to its bankruptcy filing. So you can see 2019, just after the ICO, they're not worth much. Suddenly, they're worth billions by 2020. They managed to sustain this until you can see here the first major drop in Q3 of 2021, and they could no longer keep their flywheel and everything else operating until the big crash and burn and bankruptcy. Let me skip the next section. Let me go ahead and continue here. Despite the values reflected on its balance sheet, Cell had limited utility, including because there was no market to deploy Cell outside of Celsius's platform. It really had no utility outside of that. In 2022, Celsius employees routinely discussed that Cell was worthless, stating that its price should be zero and that Celsius should assume Cell is $0 since we cannot liquidate our current Cell position, and questioning whether any party other than Celsius itself was purchasing Cell. Second, the increasing price of Cell benefited Celsius's insiders who held most of the Cell following the ICO and then made millions of dollars selling a substantial portion of their Cell tokens. Between 2018 and the petition date, Mr. Mashinsky, can we not call him Mr.? I remember that used to be a term of respect. Let's just call him Mashinsky, sold at least 25 million Cell tokens, realizing at least $68.7 million on these sales. Personally, between 2018 and the petition date, he realized $68.7 million off of these Cell tokens. Ridiculous. Daniel Leon, also a founder of Celsius, sold at least 2.6 million Cell tokens for at least $9.74 million. As others are pointing out right now on Twitter, it would be kind of a surprise if Alec Mashinsky is not arrested soon. Based on what's being found out here. During the height of Celsius's market making, Celsius often sought to protect Cell from price drops that it attributed to Mashinsky's sale of large amounts of his personal Cell holdings. As a result of Mashinsky's sales, Celsius often increased the size of its resting orders to buy all the Cell that Mashinsky and his other companies were selling. These trades caused Celsius's former chief financial officer to write, "We are talking about becoming a regulated entity and we are doing something possibly illegal and definitely not compliant." As one employee noted in an internal Slack communication, if anyone ever found out about our position and how much our founders took in US dollars, could be a very bad look. We are using users' USDC stablecoin to pay for employees' worthless Cell, all because the company is the one inflating the price to get the valuations to be able to sell back to the company. Finally, Celsius did not earn sufficient yield on its crypto asset deployments to fully fund its Cell buybacks. As a result, it began using customer deposited Bitcoin and Ether to fund its Cell purchases. Customer deposits of Bitcoin and Ether, something of value, in order to fund their illegitimate pumping of the Cell token. But because Celsius lacked adequate reporting systems to track and reconcile customer assets on a coin-by-coin basis, Celsius was unable to track it when it was short the necessary coins to meet its customer obligations. At this point, they just gave up accounting altogether. At least they had some sort of accounting up to some point. FTX had none, apparently, whatsoever, ever. But yeah, they gave up basically at this point. Celsius was therefore caught off guard in early 2021 when it discovered a shortfall in BTC and ETH, which it had been using to fund sell buybacks. Because the prices of BTC and ETH were increasing at the time, the amount of dollars. Yeah, this is interesting because we had reported before, or found out in reports, that Celsius lost money during the bull market. We were like, how does that happen? How do you lose money during a crypto bull market? Well, this is how. Because the prices of BTC and ETH were increasing at the time, the amount of dollars it cost Celsius to acquire the number of BTC and ETH also increased. Celsius scrambled to correct the shortfall by using stablecoins to buy or borrow the number of BTC and ETH it needed. Correcting the shortfall in BTC and ETH cost Celsius approximately $300 million, which it paid in stablecoins. Celsius used customer deposits to acquire those stablecoins. As a result, Celsius was left with a hole in its balance sheet of stablecoins rather than BTC and ETH. That hole continued to grow as a result of Celsius's continued buybacks of Cell and the significant losses Celsius suffered on some of its deployments in 2021. Celsius's stablecoin deficit between May 28, 2021 and Celsius's bankruptcy filing is depicted in the below chart, which I'm not going to show, but you can click on the link afterwards and check it out for yourself, and amounted to $1 billion hole in Celsius's assets. As the chart also demonstrates, as customers began withdrawing BTC and ETH from Celsius in May and June 2022, Celsius had to unwind its borrowings to recover the BTC and ETH it had pledged. As a result, its stablecoin deficit was replaced with a deficit in BTC and ETH. Yours and ours, BTC and ETH. I just hope that there's some sort of clawback here. Alex Mashinsky definitely has an insane amount of real world assets, I'm sure, at this amount, disclosed and undisclosed. I wish that they would find these out that he purchased using fraud and lies that he did. And these are lies that he told me to my face, that he told you guys, if you've been watching the show, to your face, because I've interviewed Alex Mashinsky twice, and he seemed a little bit shifty. He seemed like someone who was not really answering my questions directly and just regurgitating. So to me, that was kind of a sign that he wasn't someone super trustworthy. But still, I feel wrong just to have had him on the show, someone allowed to say such illegitimate things. Granted, he was someone who was very respected in the industry, was a key figure and speaker at so many different crypto conferences, frequently having his own area for interviews and so much. And he seemed like a nice enough guy to give these interviews. Who would waste their time saying such amount of fraud to people's faces continuously with a smile on his face? To me, maybe he's just another one of these sociopaths that I guess that supposedly exists so much at the high level, at the top tiers of CEOs and financial companies. I hadn't really met many to their face, or at least I hadn't personally until that point. But man, have I learned a big lesson here with Alex Mashinsky. And unfortunately, I lost quite a bit at Celsius because of my own deposits that were on there, just to earn some sort of yield on some percentage of my cryptocurrency that got and was locked up there, unfortunately. But hopefully, those of you guys who have lost do get some back, maybe in the form of clawbacks from whatever the Mashinsky estate still has. But it's just deeply upsetting to see the amount of fraud, how deep the fraud goes, and how from the very beginning they were willing to scheme against their own customers. It is, frankly, revolting to witness. When it's been, especially with FTX and Celsius, to see these mainstream crypto companies do this sort of thing, sickening to set the cryptocurrency perception and reputation at large back so much from the hard work that's been done from the builders and the dreamers that have come to allow for this to happen. Satoshi turned in his grave for sure. Anyway, let me know what you guys think. We are going to continue with just a few more things here to end on a lighter note. Like this, Bitcoin maximalism is a mental illness. If you were not sure yet, Uri Wertheimer had this to write. So Luke Dash Jr., and I don't want to make fun of him too much, right? I'm not just trying to pick on him. You can take the names out of this, but this kind of idea is very prevalent and making the rounds again in Twitter, for example, this idea of what is a valid cryptocurrency transaction, or specifically, what is a valid Bitcoin transaction, right? If you pay the fee, you're included in the block. Should it not be called a valid transaction? Coming up a lot, but check this out. So Luke, the guy who lost, the Bitcoin developer who lost, looks like most of his Bitcoin after some sort of exploit. Still not sure what went on there, some sort of hack of all that. But anyway, Luke writes, wrong. There's no such thing as changing the protocol in this context. The protocol already doesn't allow data storage. Brian, well, it seems you are mistaken, as recently people have been storing some JPEG data in the protocol. Luke, they are attacking Bitcoin, not using it. Brian, we can agree they're creating valid Bitcoin transactions, right? Luke, no. Brian, LMAO. Then how are they included in blocks? Luke, by lying and tricking the code. I can't believe that this is this. No words. Oh dear. Yeah, I don't want to pick too much on Luke here, but there's plenty of comments here. I wonder when this was. I'm not entirely sure when this took place. Anyway, Jake Shervinsky had this to say, which is something that I also agree with personally. Miners and validators should never be compelled to censor transactions, period. Because if you do censor JPEG transactions, pictures being put on the blockchain, this just means that you have Craig Wright then come out there and create something like Bitcoin SV in order to increase the block size to allow people to put JPEGs of Cuban dance teams on the blockchain and whatever else they want to put. They create that instead. Okay, these jokes are getting a little bit weird for me. And so I will leave you guys. I hope you've enjoyed the show here with the quote of the day, which is, the most sincere compliment we can pay is attention, by Walter Anderson. Of course, I thank you guys for paying me some sort of attention, giving me some sort of attention by just being a part here, sharing some of your valuable time. I hope you have found it valuable for sure as well, some of the information that you're finding on the show. Remember to hit like if you did enjoy the video, subscribe if you're new to the show, to the new Cryptos News. Glad to be back with you guys so much, and comment below your thoughts on anything we spoke about, any deep-seated feelings that you had. I love to read them, and I do appreciate every single one that you guys write, even though I might not get a chance to get back to all of you. And I also had a little bonus quote of the day here, which is Pink. I never thought I would quote Pink, but I really like this one, since Twitter can be kind of a nasty place, crypto Twitter. And if you are going to be out there, maybe you'll keep this one in mind. She said, I care about decency and humanity and kindness. Kindness today is an act of rebellion. I can feel that so much on social media sometimes. Anyway, take care, everyone. Much love and stay cryptic. Peace.